Development banks are specialized financial institutions which provide long-term credit or loan to other enterprises for capital projects. They provide loans for projects in the area of agriculture, commerce, and industry. Examples of development banks in Nigeria are Nigeria Industrial Development Bank, NIDB, Nigeria Bank for Commerce and Industry, NBCI, and Nigeria Agricultural and Cooperative Bank, NACB. So majorly what development bank does is that they specialize in providing loan for people that want to carry out capital projects. Capital project like, you want to go into farming in a big time is capital project. And if you want to go into commercial activity as well, it is capital project. Anything that you want to invest in with the mindset of having your own profits, you want to make an investment, it's a development project. So development banks make loan available for people that want to do this. Let's quickly look at the functions of development banks. 1, provision of funds for capital projects. Development banks provide long-term loans for capital projects in specific areas. Now I know that the word long-term is not new again. Yes, so the long-term loan can last for 3 years, 3 to 4 years. Then another function, they undertake research. Development banks do undertake research to determine viable areas to develop industries. There are industries that will thrive in certain places. And so if such industry is located in the wrong place, no matter how good and well facilitated it is, the person will not make profit. Take for instance, if somebody says, oh, he or she has money, in fact, not just borrow money now, whichever way, there's money available to start a business. And somebody decided to come to a place like Faith Academy, and all the person decide to come and sell in Faith Academy are something like walking stick, something like wrapper, this Hollandis wrapper, and so on and so forth. You will agree with me that the person might not really make money. Or if somebody comes to a place like Faith Academy and set up ice cream joint, shawarma joints, and so on. Did you guys know? So there are viable areas. So they help, since they know that this money is huge and then it will not be wise for you to just waste it. They help to determine various areas in which one can invest. And this area is not limited to a particular location, but different types of business that an individual can do as well. Another function is that they render special advice. Development banks also advise the industrialists on surest or best way to invest. You will agree with me that sometimes it is better to save your money than to invest in the wrong business. If you invest in the wrong business, you will lose your capital and then you won't even make any profit. When you lose capital in the first place, it's sure that there won't be profit. Whereas if such money is saved, you may not really make much profit as it were, because the interest rate in Nigeria is so low and it's not even regular. But you are sure of one thing, that you won't lose. But we cannot fold our hands and say we will not take a risk, we will not invest because we don't want to lose. No. So these development banks try to advise industrialists, people that want to invest, on sure way, how to go about it, decisions they need to make, things they need to put in place in order to be successful in the area of their business. Now, one thing is common in the functions of this banking we have been talking about, and that is advice. You will agree with me that even commercial banks also render advice to their customers. When we get to merchant bank, they also render advice. Mortgage bank render advice. Even central bank, under the ways central bank control commercial banks, or the way they control the circulation of money in the economy, there is moral suasion. And so moral suasion is in form of advice. They persuade commercial banks. So please take note. In case you come across any question like the common function, I've not come across question like this though. But sometimes when you are given to reading and then you see something like this, you'll be able to tackle it. I hope we are together.
Yes, ma'am.
So please take note. The common function among all the banks is that they render advice. So another function is manpower development. They contribute to the development of manpower by making funds available to the manpower training institutions. There are institutions that train manpower on different things. There is something called training and development. When new workers are recruited, the job, what is expected will be imparted on them so that they can perform well. And then it will be to the productivity of the company so that on the long run, they are going to make profit. So there are institutions that are involved in training people. And I'm sure you must have had somebody, or I wouldn't know if you have had somebody that say, oh, yes, we are still doing.
I have a question.
Okay.
Like in economics, they're always saying like in the long run and the short run. So like in the long run is like how much space of time?
In the long run and in the short run, mostly it's under long run cost, short run cost. Are we together?
Yes, ma'am.
Long run and short run is different from long term and short term. For the
Okay.
long run is a period that is long enough for all the factors of production to be variable.
Okay. Yeah.
While in the short run, at least one of the factors of production is fixed. Have you come across any question like that?
Yes, ma'am.
So please take note. It's different from short term and long term. I hope it's clear now.
Yes, ma'am.
So anything long run is a period that is so long enough for all the factors of production to vary. While for short term, at least there's a fixed factor. Can we proceed?
Yes, ma'am.
All right, so like I was saying, there are institutions that train manpower and development banks makes money or funds available to them. Then implementation of government policies. Development banks also help to implement government policies on industrial, commercial, and agricultural development. Government come with policies. This is what we are expecting in so sector. And so you get to bank, you hear them say, oh, this is our new policy, this is a new implement, this is what we just get from central bank, this is what government asks us to say. Government are saying it, but they need power, they need people to implement it. And so the development banks help in implementation of government policies, depending on the area where such policies are being formulated. So let's go to merchant banks. Merchant banks are financial institutions which perform specialized functions such as acceptance of bill of exchange, issuance of loans for foreign trade transactions, issuance of new shares, and provision of medium and long-term loans. They are sometimes referred to as acceptance houses. The first merchant bank in Nigeria was the Nigeria Acceptance Limited, NAL, established in 1966. Now you remember when we were doing our assessment, I said there was a question on merchant bank, but because we've not done it, there's always this question that merchant bank is also known as dash, is acceptance houses. Please take notes.
Okay,
So what merchant bank does is that they make loan available for those that are into foreign trade transaction majorly, those that are involved in exportation and importation of goods. And the first one we had was in 1966, and then it was not tagged merchant bank. It was called Nigerian Acceptance Limited. And another name for merchant bank is acceptance houses. So let's quickly look at the functions of merchant banks. Merchant banks arrange loan at request of foreign traders. They make sure that there's always available loan. Because if they can't get loan from them, then it's as good as they are not even doing anything. Because virtually all the banks give out loan. That's the surest place people can get to, and they are sure of getting loan. And bank will also make loans available because they know that is their most profitable function. That's the one that gives them profit most as a result of the interest on the loan they are giving out. So they always make loan available at the request of the foreign traders. Another function is acceptance of large deposits. Merchant banks accept large deposits from big-time customers. If you want to make large deposits, why not? There's no problem. Because it is from that deposit they will even have what to lend out to people that want to borrow money. And then another function is equipment leasing. They assist companies wishing to lease their equipment. You know, some people are using a place, big organization, and you discover that it's not all of them that actually owns where they are owing. They actually, it's on lease. They pay for the building they are using. So the merchant bank help this. They help companies that have big equipment to lease out. Advisors to companies, they act as company advisors by way of telling them possible areas to invest. I hope you still remember that the most common function among the banks is what? Advice. They give advice. So they advise their customers on possible areas to invest. Because the truth of the matter is, it's not in all areas that you can invest your money. You know, you said? Do you say something? When MMM came then, they were like, oh, invest your money, you get this, you get that. I'm sure if you approach bank at that time, they will tell you no. Because what and what, the prospects.
No, nothing.
You said?
No, ma'am.
What do you say? Ashilere, can you hear me? Can you hear me? Ella, can you hear me?
Yeah.
Okay. So like I was saying, they will tell you the most possible area to invest because it's not in all areas that you can invest. Then another function is provision of long-term loan. They issue long-term loan to the government and companies abroad for development projects. Of course, if you want to really go for development projects, short-term loan may not really be the best for you because you are not likely to get the money back in 3 or 4 months. No. So they make provision available for long-term, as in loan. People that want to really go into capital project that they may not get their money in the period of 3 to 4 months. So they make long-term loan available. Mortgage banks now. Mortgage banks are financial institutions that specialize in granting loans to individuals in corporate bodies for building purposes. Such loans are repaid by installments and can be spread over several years. Anything that has to do with mortgage is for building purpose. I hope we are together. So what they do is they specialize in granting loan to either individuals or to corporate bodies purposely for building purpose. And then it can be spread over years. If you get such loan, you can pay in 3 or 4 years, depending on the agreement you have with the bank. So the functions now. 1, acceptance of deposits. Mortgage banks accept deposits from customers in order to encourage savings towards owning a house. If you are saving purposely for building, they accept such deposits. And then provision of long-term loans. They also provide long-term loans to people or estate developers to build houses. Like I said, they give loan and then you agree with them how you think it will be convenient for you to pay it. It could be in the space of 2 years or 3 years as the case may be, and if possible 6 months. The person that wants to get the loan knows his or financial capacity. And so depending on the financial capacity of the person will have an agreement with the mortgage bank, and then loan will be given for building purpose, and then you pay back instrumentally or bit by bit. Another function is development of mortgage institutions. They supervise and encourage development of mortgage institutions. They are not the only one in it. There are other institutions set up, not called banks though, but major thing they do is they encourage people to have their own personal houses. They give out loans. So the mortgage banks see to their development, and they see to the way they do things to make sure that it's in line with the laid down rules and regulations given by the government. Another function, they give advice on housing matters. They advise and assist government on housing matters. Oh, this is what we can do. Okay, you can build housing estates and then sell it to people. It is the mortgage bank that advises government on matters that has to do with housing or building. Then there is provision of houses. Mortgage banks are involved in construction of houses and offer them for sales to the people. They can build houses, they build estates, and they place their adverts, and people go to them, buy the house, and then pay either at once or instrumentally. Now to the non-banking financial institution. There is traditional financial institution, insurance companies, hire purchase companies, and building societies. Now, even though in our first class under financial institution, I spelled out these ones, but for the purpose of emphasis, I have to do this again because you can have OBJ question like, which of these is not a non-banking financial institution? And 3 of these should be mentioned and 1 other one. So please take note, these are non-banking financial institutions. So we'll start with the traditional financial institution. The traditional financial institution involves the coming together of a group of people with common interests in the same place of work or community who mutually agree to pool their resources together in order to save, learn, and manage money. E.g., Esusu in Yoruba or Etio Utu in Igbo. So in traditional financial institution, not necessarily going to bank, no, it's just people. It could be people working together in the same place. It could be people living in the same community. They feel, oh, let's put our money together, save it. If somebody is in need, the person can borrow from there, return it back, and then we'll be able to manage our money. Rather than spending the excess, let's save for the rainy day. Functions, it encourages savings. Members, through the pooling of their resources together, are encouraged to save. Sometimes if you are saving 1 naira, 2 naira, you'll be like, it's too small. When will the money be up to this? But pooling resources together, you know that in 1 month, you can save as in collectively, you can save 1 million. And even if somebody is in need of money, of course, you can approach, because in the first 2, 3, 4, 5, 6 months, nobody might borrow. And so if you guys are consistent in saving 1 million per month, that's 6 million in 6 months. And maybe if somebody will need money, the person may not need more than 3 million at a time. There'll be money. So it actually encourages people to save. Another thing it does is that it assists members to borrow. Members who are in need of money for whatever reasons are permitted to borrow. Where you are saving money, if you are in need of money, if you are in need of more than what you have in that account, you can borrow. 3, it ensures proper management of funds. The saving and the lending of funds to members assist the institution to manage their funds properly. You all know that if anything happens, you all bear the consequences of whatever happens. So that makes people involved to manage their funds properly, because they know that if people want to borrow money, we just have to make it available. If not, then we'll tell them why their money is not available. If their money is not available, there's going to be problems. So because of that, there's always proper management of funds. Then 4, promotion of investment. Traditional financial institutions may decide to invest in viable business that can yield profit to the organization. They feel, oh, somebody wants to go into business, the person doesn't have money. Let's give out this money. The person will pay us interest. The interest, it will be the profit of the organization. They can invest in so many things. They can say, okay, now that corn is cheap, let's use our money to buy it and then store it. Then when it is off season, that the price has increased, we can sell it. So it promotes investment. Another function is assistance to member in time of need. Traditional financial institutions can assist members when they are in financial difficulties. Any member in financial difficulties can run to the traditional financial institution where he or she is a member, and then the situation at hand can be salvaged. We move to the insurance companies. Insurance companies are financial institutions that are concerned with insurance. And then insurance may be defined as a contract between an issuer and an insured, under which an insured promises to indemnify, that is, compensate the insured against loss, which he may suffer in future upon the payment of a premium. So there are certain risks which can be insured against. Examples include risk of fire, burglary or theft, accident, loss of goods, untimely death, bodily injury to factory workers, and so on. Of course, as an accounting student, I'm sure the word insurance is not something new to you, but then we still need to talk about it. What they are concerned with is just insurance. And of course, in insurance, there are two parties, the insurer and the insured. They make sure, okay, if anything happens now or in future, it should be properly taken care of. So the functions quickly. One, it leads to risk reduction. Insurance helps to reduce or control loss or liability of a businessman. It spreads the financial losses of the insured. If for instance you have insured your company and God forbid there is fire accident, people will be like, wow, this is a big loss. Oh, this person will be in debt now. You will just be smiling. Why? Because you have been saving towards that. The company is insured, and so the insurance company will be the one that will fix everything back, and then it won't even be as if you have lost anything. Two, it offers investment opportunities. Insurance make funds available for investment. A large proportion of the resources are invested in the capital market where businessmen can obtain loan. Now, if people are saving towards the evil day or the days of danger, and there are people that actually save for 5, 7, 10 years, and yet they have no cause to actually collect anything from what they have been saving in the insurance company. Why? Because they were not sick, no fire accidents, no motor accidents, everything has been smooth, and their money keeps increasing. So the insurance company will not just sit down, be looking at the money as if they are watching TV. They give it out in the capital market where medium and long-term loan is being given out, and they also make profit. So they offer investment opportunity. Okay, some people feel I'm saving for evil day. Some other people need money now, and if they collect it now, they are going to pay later in future. There's always money available for people that want to invest but doesn't have money to do about it. And then on the long run, they pay back the interest and even the capital. Number 3 function, provision of old age and disability. Life assurance can be used as a way of providing, as a way of providing for old age and to make provision for permanent disability. If in the old age, what is common is that some actually suffer for old age sickness, and that deprives them of running their daily activity. And yet, as long as they are living, they still need to eat. What they have been saving for such period will salvage the situation at old age. Motivation of workers. Through group insurance policy, the workers are fully aware of a secured future. Hence, they will work harder, which will bring about higher productivity. If you are working in a place and you know that if anything happens, you are secured. God forbid, if you are sick, you will not even spend out of your salary to cater for yourself. If this happens, you won't spend from your net salary that you are getting. Everything will be okay. After all, from your gross salary is not everything you are getting. They will tell you this has been deducted, this and that. So when there is group insurance and the workers use for anything that happens to us, the company has actually tried by insuring us. They will want to work hard and they will not want to leave your organization because it's not every organization that does that. 5. Provision of security. Insurance provides security to commercial activities. Some small enterprises would have collapsed as a result of major losses, but insurance always takes care of such uncertainty. Nobody pray for evil, but yet evil happens almost every day. Like 2 or 3 years ago, there was a fire incident at, what's the name of this market? Is it Panteka, where they sell wood in Kaduna? Is it Panteka? Panteka. And millions of naira. Some will be crying. In fact, some may have hypertension. Some may just collapse from there. And some will be smiling. Why do you think they are smiling? They know that insurance company will cater for that. Because they have already, rather than them collapsing, their insurance company will take over from there because they have been saving towards that. So there are uncertainty, and some people are so wise enough to save towards this. And so they actually provide security. So this security we are talking about now is financial security and not the social or the political security. Please take notes. So we've come to the end of our class for today. The evaluation now. Explain what you understand by mortgage bank. So what do you understand by mortgage bank? Ashley?
My mortgage bank is a type of bank in the capital market which gives loans out to people or enterprises for building houses.
Yes, for building houses. That's a very good one. So please make sure that the definition you are giving, irrespective of how you are going to put it, the word for building purpose must be present in your definition of mortgage bank so that you get your full mark. All right, thanks for that. Do you have any question?
No, ma.
Okay.
No, ma.
If there's no question, I'll project the assignment now. You have to differentiate between hire purchase companies and building societies. If you are familiar with your Q&A, this building society came out in 2016. And so far, I think that is not a common question. So who knows if they are likely to bring it again in the forthcoming one. So number 1 question, differentiate between hire purchase companies and building societies. And 2, describe 5 functions of hire purchase companies, to be submitted via WhatsApp. I hope you know the WhatsApp number.
Yes, ma.
All right. So thanks for attending the class. Anytime you have questions, please feel free to ask. And I really appreciate the question you asked today.
Thank you, ma.
You're welcome. God bless you. So let's pray. Our Lord Jesus, we thank you for how far you have helped us in our class today. Be exalted, O Lord, in the name of Jesus. We pray that all of this we are doing preparation for exam, our effort to be crowned with huge success. For in Jesus' mighty name we have prayed. All right, see you next week. God bless you.
Amen.
Amen.